when will interest rates drop? Frankly, I don't have an answer to that. But what I can share with you is the formula that would help us predict when interest rates should drop. The formula is quite simple. Rates will drop in Canada when we have a recession and we have the inflation rate between the 2 to 3% target that has been communicated by the Bank of Canada. That will be when we have low rates. So in order to predict when interest rates will drop, we really need to have a discussion about the two parts of this equation, which is recession and inflation. So when can we expect a recession? Well, globally, things are not looking so strong. There are a lot of economic headwinds. In the Eurozone, we are seeing the deepening energy crisis as winter approaches, along with inflation and high interest rates that is fully expected to push Europe into recession. In England, the Bank of England has already declared that that country and the UK is in recession. And that's along with rising interest rates. That is getting deeper and more complex. At the time of recording this video, the economic market in England is in absolute turmoil. And in China, we're seeing diminishing growth in that country as well, which for decades has been the poster child of growth globally. And so if GDP output is diminishing in China, that says a lot about global growth. Here in Canada, domestically, recession fears are prominent. Economists and bond traders are fully pricing in a recession within the next 2 years. But the severity of that recession really is up for debate because we have one thing going for us in Canada, and that is a very low unemployment rate. In fact, last month, there were a reported 1 million job vacancies that needed to be filled, meaning employers are desperately looking for workers. And as long as Canadians are employed, it should insulate the impact of a recession here in Canada. And it's for that reason that the Bank of Canada, and also in the United States, very similar issue mirroring Canada, they anticipate that they will need to do more work raising interest rates to cool markets off to get balance again so that we can operate at capacity and not over capacity as the employment numbers are suggesting right now. The second part of this equation is inflation. And we are starting to make some headway against inflation here in Canada. In fact, we saw headline inflation drop in both July and August. It'll be a few more weeks before we see the September numbers, but we expect that trend to continue. However, that was the headline inflation. Core inflation, which is a much better metric that the central bankers use to determine inflation, strips out the cost of fuel and food, which are most volatile in this equation. And core inflation has remained relatively hot and isn't yet declining. And it's for this reason that the Bank of Canada is anticipating and predicting that it will take all of 2023 to lower core inflation to that 2 to 3% target range. So with all of that information, where does that leave us for interest rates in Canada? Due to the stubborn inflation and very strong employment numbers, at the moment, the expectation is that rates will need to rise further, probably approaching a 6% level for a 5-year fixed in order to curb inflation and get the economy at capacity and not over capacity. However, the backdrop of all of this is that the monetary policy that is being instituted right now so aggressively may be overshooting the mark, and there isn't quite enough time for monetary policy, the effects of monetary policy, to catch up with the numbers. Everything is lagging behind. There is an expectation that this smashing hammer action of rising interest rates will have its desired effect fairly quickly and will eventually do two things: push the Canadian economy into a recession. How severe, we don't know, maybe mild, maybe deep. And number two, will create a deflationary environment where interest rates will have to drop in order to support economic growth again, and the entire cycle can start all over again from zero. My name is Christopher Mulder. I am a Toronto-based mortgage broker. If you would like to discuss how current and future interest rates will impact you and your life, I invite you to get in touch with me. Please visit me on my website, tridacmortgages.com, to book a call, or reach out to me directly at 416-732-8020. Till next time, bye for now.